Okay, so just a quick recap before we move on. A morning star is a three candlestick pattern that forms at the bottom of a downward market, a downtrend. What you're looking for is a clear downtrend. So you need a clear downtrend, a bearish candle, your indecision candlestick or doji, which is showing that your market is exhausting. Sellers are jumping out, taking profit. Buyers, pending orders are being hit. There's probably an area of support right here. And then you're looking for your third candle, which would be a bullish candle. And I would enter at the close of this bullish candle. So you have your downward market, you see your bearish candle, your indecision, followed by a bullish candle, and I would enter at the close of that bullish candle. An evening star, so morning star, the market is sleeping, the pattern's formed, it's morning time, the market wakes up. Okay? Evening star, you have a clear uptrend. The market has momentum upwards. You see a clear bullish candle form, followed by an indecision candle or a doji right here, which means basically the market's losing momentum. Buyers are jumping out. Sellers pending orders are being hit, probably an area of resistance right there. So you have your bullish candle followed by the doji, followed by a bearish candle. Okay, I would be entering at the close of that bearish candle. The market is awake. It's nighttime. Your candle formation forms. Market's going to sleep. That is the morning star and the evening star. Let's move on to bearish and bullish engulfing candles. Okay, one thing I want to make clear, if you cannot identify a true engulfing candle pattern, you're going to struggle. This is an engulfing candle pattern. This is a bullish engulfing candle pattern, okay? This is an engulfing pattern, okay? This is equity. This is not an engulfing pattern. Some people will argue, this is what I was taught by a trader who's very successful. This is not what we are looking for. This is what we are looking for. Okay, it's where on a bullish engulfing, the bottoms are roughly the same level. On a bearish engulfing, the tops are the same level. See how these are not the same, but these are. This is not what we're looking for. This is what we're looking for. If you understand that so far, give me a 1 in the chat box. If you understand that this is equity and this is engulfing, give me a 1 in the chat box. All right, cool. So what you're looking for on a bullish engulfing pattern, once again, a bullish is a downward reversal. So the market is in a downward momentum, okay? You have your bullish candle form, okay? It comes down, it closes. The next candle opens, and it engulfs the previous candle, which basically means that you can fit this body inside here, okay? And I would be looking to enter, well, the way I would be looking to enter this is like this. I would put a line here on this one and here on this one. This would be my sell zone. I would be looking for this candle to close and the market to come back down within 5 to 10 pips to activate my order of a buy. Okay, so if I have my market like this, boom, these are bearish candles, downward momentum, and then I have this little one right here. Okay, I got a wick here, I got a wick here, and then it closes, opens. Here's my bullish engulfing candle. I'm going to put my line here. I'm going to put my line here. This is now my sell zone. What I want is for this, when this closes, I want this market to open, and I want it to push down to this area. As soon as it pushes down to this area, I will either have a alert set on my phone or a pending buy. My stop loss will be just at the recent low. Okay, so that would be how I would trade that pattern. Now, a bearish engulfing is it as the market is moving up. You get your bullish candle, and then you have your bearish candle that engulfs the previous bullish candle. This body can fit in here. The way I would trade this, I would put my line here. I'd put my line at the wick. What I want is for this market to do exactly what it did. This is now my sell zone in this area. Okay, this market closed here, opened here, it came up, activated my sell zone. Now we're looking for a push down. All it means basically is on a bullish is that as once the sellers were in control, the buyers have now flexed their muscle and taken over the market, and that is signified by engulfing candles. Okay, a bearish, the buyers were dominant. The sellers came in, flexed, and took over, signified by a bearish engulfing candle, also known as supply and demand. Right? Does everybody understand that part? If you're following with me along so far, please put a 1 in the chat box. If you're following with me along so far, please put a 1 in the chat box. Cool, cool, cool. Let's move on. These are called spinning top patterns, okay? These are either at the top or at the bottom of trends. As you can see over here, if a spinning top forms during an uptrend, this usually means possible reversal in direction could occur. So if you have your market going like this, you have your candle, you have your next candle, you have one that forms here. Wait, there's not two. You have your next candle, and then this one forms, and then immediately after this one forms. That is what confirms your reversal to the downside. Okay, if you see, you'll see all the time one of these form in the middle of a trend. Okay, that does not. One second, guys. All right, I apologize, guys. I got 2-year-old and a 3-year-old. We're just fighting, so apologies. So what you're looking for is on a reversal to the downside, is you're looking for a bullish indecision, okay, followed by a bearish indecision. You have to have both of these. When we jump on the chart here in a second, you'll see multiple times where the market's going up, up, up. You'll have one form, and then it'll continue to go up. What you need is for it to go up, up, up. You need one, and then two. And the majority of the time, that signifies the reversal. Okay, the exact same thing except opposite on a downtrend. On a downtrend, you're gonna have your market coming down. So these are candles, just so you guys know, if you didn't already know. Coming down, down. You have one form. You have another one form immediately after, which signifies a reversal to the upside. Okay, does that make sense so far? Just that little part of the spinning tops, does that make sense to you guys? Cool. So, one second. Let's move on to uptrends and downtrends. The correct way of drawing trend lines, you must connect 2 consecutive wicks without having any breaks in the line. Okay, an uptrend, higher highs and higher lows. Downtrend, lower highs and lower lows. So you can see on the uptrend, we have our low, we have our high, we have a higher low, a higher high, a higher low, and if this comes down, we now have a higher high. On the downtrend, you have your high, your low, a lower high, a lower low, a lower high. If this continues, you have a lower low. Pretty basic, okay? That is the most basic signal of an uptrend. Higher highs and higher lows, basic signal of a downtrend, lower highs and lower lows, okay? Now, you saw where it said you must connect 2 consecutive wicks without having any breaks in the line. What that means is if this is a wick, this is a wick, and this is a wick, this is a wick, this is a wick, and this is a wick. Okay, this is number 1, this is number 2. For the few of you who are on here, which I appreciate, based upon this right here, which one is the right trend line? 1 or 2? Yes, number 1 is the right trend line because you have 2 wicks touched. You have 1 here, 2 here, and then the one that broke through was the 3rd, which is okay because you have 2 consecutive touches. Now this, you have 1 touch and your second touch broke through. People will say it's still a valid trend line. We want confluence. We want multiple reasons and confirmations. So this is a breakthrough, which means this is not a valid trend line in my opinion, because here's your second wick that touched. If you have 1 touch, a breakthrough, 3 touch, no good. You have 1 touch, 2 touch, the breakthrough, that's okay. Now, support and resistance. Okay, the way you find support and resistance is quite simple. Support would be on it's like as if you're sitting on your chair. The chair is supporting you from falling down. So your support is always going to be on the bottom. Your resistance is if you are pushing on the ceiling, but you can't push through. The ceiling is resisting your force, so it's on the top. Okay, just remember, resistance is the ceiling, support is the floor. Okay, and some things you want to look for is this. You want as many times, you preferably want the market to have come to an area of resistance or support 2 times or more and been rejected. You can see here clearly it came to this area once, twice, 3 times, and was rejected. That is a clear area of resistance. Plus, it's on a whole number. Whole numbers are major psychological areas in the market. Okay? Any whole number is an area that other traders are going to be looking at as resistance and support. As you can see down here, it was rejected off this line multiple times. That is a clear area of support. Okay, pretty simple, pretty simple. So now let's go ahead and let's jump on the charts real quick. And I will show you. Can you guys see my chart? If you can see my chart, go ahead and type a 1 in the box. Okay, so let's go ahead and find some of these things I was talking about. Let's start out with our morning star and evening star patterns. Okay, so let's go to the daily chart. So here's a perfect example of a morning star pattern, right here. Okay, this area right here. You can clearly see that the market, is in a clear downward momentum. We have our bearish candle, followed by our indecision candle, followed by our bullish candle, and my entry would have been right here, which would have yielded us roughly, we would have had a 8 pip drawdown, and it would have yielded us roughly 165 pips. Now, where I would have exited this trade is the form of a evening star pattern. Even though it did not carry out, it still created an evening star pattern that you can see right here. The market clearly went up. You have your bullish candle, your indecision, followed by your bearish. Okay, I would have entered it to close. My stop loss would have went to the recent low, and it would have ended up going the opposite direction. So it does, like I said, it does not work every time, but we can find a evening star pattern that does work. Okay, here's a clear one right here. Here's an evening star. You had your upward momentum. Or kind of a funky one. I like this area better. This isn't very much movement, so I actually wouldn't go for either of those. Let's see if we can find something more clear. The evening star. Here we go. Here's a good one. So we have our upward momentum. No, don't like that one either. It's only 2 candles. I mean, it's still a lot of pips, but it's only 2 candles. Looking for something more precise. Okay, this one will work right here. So your market's going up, it comes down, retraces, moves back up. Okay, you have your bullish candle, your indecision, followed by your bearish, and the market drops. Keeps dropping until you see a morning star pattern. Bearish candle, indecision, bullish candle. I would have got out right in this area, which would have yielded approximately $290 pips. So are you guys seeing how this is taking place on these patterns that we had talked about just previously? Now let's find spinning tops. Spinning tops are harder to find, okay, guys? But when you do find them, they work. But they're let's go to the 1 hour. More movement. Spinning tops, when you find them, they work, but they are not very easy, nor are they very common. There's some sloppy ones, but I don't like. I mean, you can. But here's some. These are more like tweezers almost. But here's a good example right here. You can see the market comes up, creates an indecision, followed by second indecision, market drops. Here's another example. Market drops, creates an indecision, second indecision, market rises, creates tweezers. I just don't like sloppy ones. Here's a morning star pattern, movement down, bullish or bearish, indecision, bullish close, market shot up. Same here. Spinning top, perfect right there. Market goes up, creates an indecision, followed by second indecision, market drops dramatically. There's another one. Market has in a high, very, very long uptrend, creates an indecision, followed by second indecision, market falls. Evening star pattern, market's going up, bullish candle, indecision, bearish candle, market drops. Evening star pattern, market goes up, bullish candle, indecision, bearish candle, market drops dramatically. Now let's find bearish and bullish engulfing candles. So right off the gate, I see a bearish engulfing candle right here, where the market's in an uptrend. We get a bullish candle followed by a bearish candle that engulfs it. So what I would do is I would put a line here, I'd put a line here. Okay, as you can see, the market immediately when it came down, or sorry, not right there. Right there. Market closed, opened, retested our sell zone, dropped. Okay. On a bearish engulfing, you want to put the line at the bottom of the body of the bullish candle and at the top of the wick. This is where your area is for your caller, your pending order. Market closed, open, hit it, boom, seen it drop. You follow it down. Okay, you follow it down until you see a pattern or something indicating that you need to get out. Right here would have been my indication, a morning star pattern. Right there, I would have got out. That trade would have had a 20 pip drawdown, would have yielded me 220 pips. Okay, that is a bearish engulfing. Let's find there's another bearish engulfing. Look at the zones right there. Look at those zones. This zone's exactly the same almost. See, we drop down, market retest comes up, doesn't take us out, boom, retest, boom, boom. That's yeah, I can't make that stuff up, guys. Let's find a bullish engulfing pattern. See, this is equity right here. You see this, guys? Oh, where'd it go? Oh, I just lost it. Dang it. Why'd I have to do that? See, this is equity right here. You see how the lines aren't even at the top or bottom? That is equity. That is not an engulfing pattern. That is equity. Find a bullish engulfing now. A lot of bearish. Okay, here we go. We have a bullish engulfing right here. Well, it's also a morning star pattern, but we can even do this. Okay, so right here, here's our bearish, here's our bullish engulfing. Line goes there. Huge buy zone. Okay, so we need this market to be touched. So what happens? It misses it barely here, comes up, back down, bam, activates our sell. It retested this market. We travel roughly, we're here. We have a 30 pip drawdown. First bearish engulfing is right here, yielding us roughly 198 pips. That is bearish and bullish engulfing candles. Does that make sense to you guys? If it does, put a 1 in the chat box. I gotta go. I'll return in just 1 second. All right, you guys, I'm back. So that does it for the bearish and bullish engulfing. So now we're gonna look for trend lines. So I'm gonna draw some trend lines and kind of quiz you guys, okay? So from what you learned, is this a valid trend line? From what we learned in the basics presentation, is this a valid trend line? Frederick says no. You are correct. That is not a valid trend line. Now it may hold true to the trend. You have your high, your lower high, and your lower high, and it did hit 3 times. And that's why people will argue that it's a trend. It is a valid trend line. But if you just simply move your trend line up and bring it down, this is now a valid trend line. It's just that it's the amount of hits that you're getting before the break. You need 2. 1, 2. You see how much of a difference just one slight movement can make. Okay, so this is not a valid trend line. It does identify a valid trend, but this is your valid trend line. Okay, so we'll go ahead and get rid of that one. That was a downtrend, and let's find an uptrend. Okay, is this a valid trend line? Is that a valid trend line? Yes, you're right, because you have one hit, two hits, and then you have 3, 4, 5 before something finally breaks. This is a valid trend line. Now, just a little insider tip, what you would be looking for to trade this, if you're going to trade it, which I don't recommend off of this, would be a break of this trend line with 3 hits. You have 1, 2, 3, 4, 5 more. But once it breaks this trend line, you're looking for a downward movement. So those are trend lines, okay? Now let's find support and resistance. Support and resistance are what I consider some of the most important parts of trading in the Forex market. Give me one sec. Let's go to current time. Okay, so what I'm looking for is areas that the market has come to multiple times and been rejected. Okay, so I can clearly see right here. I'm also looking for whole numbers. So as you can see, we're at 1.13010. So I'm going to simply go 1.130. That is considered support. It's also at a whole number. Now I'm looking for an area of resistance. So I have my floor, which is support, and I'm looking for my ceiling. So I want areas where the market has touched multiple times. So I like right there, around this area. You can see if we go backwards, or maybe even no, current price, I like this better. Okay, you can see it hit rejected, rejected, broke through, became resistance, rejected, 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 rejected. I like this area right here, 14820. Let's see if we can get a whole number. Let's go 14820. 14800. Okay, now we're at 14800. You can see it's held itself. So that is a perfect example of support and resistance. Okay, and the way that you would trade this if you were going to would be when it came down to this area, you can see if it closed and opened above this area, you go on a buy, vice versa. This is called this is a ranging market. This is going sideways. A lot of people don't like trading it. I don't mind it if the confluence is there. You know, I have EMAs, RSI, and things like that I teach in the more advanced classes, so make sure you attend those. So guys, that kind of concludes the Forex Basics for tonight. Like I said, these are the main things that I use as a trader. Is there any questions before we get out? Is there any questions that you guys have? Well, it's like just me and you, Frederick. Any questions that you have before we close out? All right. Well, I appreciate you attending. I hope you got a little bit of value. I know it's a very basic class. Now Monday, I'll have another class, and Friday, I have another class. Mondays is the weekly update, and Fridays is the weekly outlook. So make sure you're looking for those, all right? I appreciate you hanging out with me tonight. You have a good night, and I'll see you in the next one.